Hello, I'm your host, Efi Pylarinou, and today I have a repeat guest, Dharmesh Mistry, Fintech colleague, a good friend, and an amazing marathon runner too, a seasoned bank executive, if you want. You've seen it all, I think, Dharmesh, and we'll be talking about that. And now you're in a position to consult banks and fintechs in their transformation, and they're lucky to have you. Welcome to the show.
Thank you, Efi. I really am honored to be on the show again. And thank you for that wonderful introduction. It makes me sound very esteemed. But the truth of the matter is, I am just a tech fanatic and I just love technology. So everything I've done has been with passion and with kind of like the fantasy that tech is going to make the world a better place.
Yeah, the intention matters. And what I love from the things that you do and you publish is that I feel that they're led through honest curiosity, genuine curiosity. When you're writing and sharing what in the industry and what you're thinking about, it's okay, what's happening now, but also what can happen and what should happen. And I want today to focus on one of your latest articles on fintech futures that you published with the title Agentic Banking, a 30-year journey to the quote single brain. That article, I feel, it represents you. It's got, nobody else could write that. It's got insights that you've been carrying with you. If you want, you've been pregnant with them for a long time, right? And maybe they're mutating, and I'm sure that's the case with AI upon us right now. So I'd really like to kick off the discussion around this and just tell us a bit, maybe the inspiration why you wrote this, and we can discuss the main idea of this single brain and talk a bit about how we see the transformation in this AI era of banking.
Yeah, I was in a very fortunate position when I started working for Lloyds Bank in that I was deeply curious. I always wanted to do the bleeding edge stuff. And I landed in a project where we were looking at process re-engineering. And this was in the heyday of the like late 80s, beginning of the 90s. And I was part of a consultancy team representing IT part. And these consultancies looked at core processes within the bank, like the six biggest things that the bank did. And each team had a representative from head office, one from the branch, and then they had these consultancy pools that they could lean on, like HR, compliance, IT, and other areas. Except there were only two people from the IT to serve the six areas. So we were like moving between the six core processes all the time. And one of the realizations that I had from having that kind of oversight on the key things that the bank were doing was that we just work in silos and this doesn't make sense. And the way that we were building technology systems was in silos. And so I asked the question, it's like, why do we think that? Some of these products came much later on. If we'd have known about them before, we'd have done things slightly differently. Some of these processes came along, new regulations came along. If we'd have known them up front, then we'd have done things differently. But the way that we operate is great. And I'm like, I think there's a different way of operating. And I created a prototype, and it was a prototype that demonstrated how the bank could operate in the branches or in the call centers, etc., if they could get a single customer view. And it was a combination, not just of the customer data being centralized, but all of the technology working in harmony so that when you logged on, it looked at your HR profile for your skill set. And instead of you being driven by the work demands, the work was presented to you in an inbox. And it said, these are the top 5 things that you need to get done this morning, whatever, based on your skill set and your job profile. And behind the scenes, it would be balancing workloads, etc. Bearing in mind, this is in the 90s, pre any discovery of like workflow tools and stuff, right? But the point was to take HR data and apply it to the workload, because we could see that we could actually regenerate screens differently for different types of people, whether you needed larger fonts for poorer eyesight, whether you needed more detail because you were at a supervisor level, whether you needed less detail or more numbers because you're more factual, whatever. But we didn't have to present everything the same way to everybody. So there was this principle that we should be looking at all the data sources, bringing it together to understand the customer better, but also to operate as a bank better.
For the employees, for every employee.
For every single employee. Yeah, absolutely.
When you say customers, it's not in the way you've described it. It's, I would say, first for the employees, right? Internal,
correct.
Right? And depending on the function, the team, and how they fit in the organization, to empower them, which is, if we can see today, it's okay, that's what AI is potentially enabling us, right? To break these silos within the organization and empower different employees to do things very efficiently and with a very holistic way. Not that it's happening yet, right?
Yeah. The ironic thing about this is it actually does start with the customer, right?
Yeah.
Because what I realized from actually spending time in the branches was customers expect that they are dealing with the bank and the bank knows all of their dealings. They don't think you've got a separate system for my mortgage and a separate system for my credit card, therefore it's natural I should speak to two separate people. They just think, you're the bank, I bank with you, you should know all of my dealings.
Yes.
And that's never changed, right? That's always been the perception. We got that feeling very early on because when you walked into your branch, you typically went to the same branch and they typically knew you, got to know you.
Now, as you raise this point, I want to be a bit provocative. On that front, the neobanks, whatever you want to call them, not only in the UK, globally, the challengers, whatever. Yes, they have unified tech stacks, but do they really have that 360 view, or are they using add-on tools to have that customer holistic view that you mentioned? Because I suspect that it's not baked in from the start.
Yeah, and nobody, I wrote a separate article on one core to rule them all, and nobody has that yet. Nobody has a single core. And then there's no reason why you couldn't have a single core that handles credit cards, mortgages, accounts, etc., etc. So nobody has that yet. The other thing is that not many people have transitioned from offline single customer view, like in your warehouse, and then driving insights which are statically stored and then action upon in real time. That's different to real-time analysis and real-time decisioning. That's a step change, which is different, right? So we haven't quite got there. We're very much in phase one of this digitization process with the neobanks, right? They are doing things cheaper, better with their cost income ratios, leveraging the tech, but they haven't reinvented the bank yet.
Okay, I love that point. Even if we take a neobank like Starling that is only in the UK, or Bonk that is only in the Netherlands, because Revolut is complex because of the multi-jurisdictional positioning and the fact that they have different things. Even those don't have that holistic view yet.
Correct. I think like Nubank and Revolut have been thinking about the problem of the silos and have been making the right steps. And it's a combination of two things. It's not only the technology avoiding the silos, but also the organizational structure to allow you to go into other product sets, other jurisdictions without recreating the downsides of silos. There are some upsides of silos, which is around focus and understanding either that product or that jurisdiction much better, right? But how do you leverage the best of both worlds? I think those two organizations have got the closest.
Yeah, and maybe new bank is an easier one because they're focused in one
One country
jurisdiction.
at the moment.
But back to the silos, Dharmesh, I have co-authored this chapter in the Wiley book, Thinking Like an AI Native. Now, the book was published in 2024, right? We are 2025. So it was written in 23, 2 years ago. But despite that, what we have identified there is a framework that helps decision makers think of what it means to think like an AI native business, a little bit like what it meant to think like a digital business 2 decades ago, and how not to confuse it with just using digital tools. And today, when I look at Klarna, for example, because they've been very loud, I use them as an example about how they use AI tools, they're not even on the journey of transforming to an AI native business. Why? Simply said, if you think of it, if you take the customer area, and then, of course, there's the enterprise area and the ecosystem area that you also have to look at, right? But if you look at the customer area, there's different dimensions that you could apply AI. You could apply it to customer service. You could apply it to designing products and services. You could apply it to giving intelligence to the customers, intelligence as a service. There's all sorts of different ways that you could apply AI. But if you start applying AI in the usual business departments of a traditional business, like I do AI in the call center, I do AI in marketing, I do AI in fraud and compliance, I do AI in product design. They're all in silos.
Correct.
All the intelligence is unlocked at the intersection of these. That is where the real value is, because if you do only in the departments, first of all, you'll reach quickly a point where there won't be more efficiencies and cost savings, and everybody else will do the same thing because it's easy to copy. And unless you are able to unlock intelligence with AI at these intersections, you're doing nothing. That is what this framework is showing. You're basically doing the same thing, expecting a different result and not doing things differently with AI. And we have a lot of examples like IKEA. It's not a financial example, but it shows how you can do things differently. IKEA, yes, deployed AI in the call center, but what they did is they took most of their agents and retrained them as advisors in a new business that they created, where people design digitally their home and they get advice on the design. And that's a new service. Or Capital One in the US has done a great job. I use them frequently as an example, where they're using AI not in their banking app. They have created AI agents for the customers that go to the car dealers because they have a big business in auto financing. And they have created AI tools for all the car dealers. So end customers can go there and do comparison pricing, book test driving, look at financing options, everything on that intelligence, on the car dealers, and they collect all that intelligence. So that's the kind of thing that unlocks intelligence and not in silos.
Yeah, no, 100%. And this is how far away the banks actually are, in that when we think about AI, we're just thinking about it in the mainstream part of the bank.
Exactly.
It's literally just about the products, the servicing,
Yes.
fraud detection, blah, blah, blah. But what about sales, marketing, finance, HR. It's about reinventing this organization, right? What you would have called enterprise resource planning side of it, right?
Yeah.
That architecture needs to blend with the customer architecture now. And then we can redefine the business
Yeah.
because you can't just do it on one side, right?
Yes.
Because this side is the bit that makes this side happen, right?
Yes.
Unless you reinvent both, you're going to end up with the same thing.
Yes, exactly. And yes, you can gain some efficiencies and you will gain them, but it will soon, they will be exhausted within the different departments.
Correct. Correct.
And that's it. I like to joke as we are recording this and it's summer. There's a difference if you have an existing home and you need air conditioning and you go and dig holes in every room and you add an air conditioning unit that is not customized for the exact size and needs of the room and the place versus having built a central air conditioning from the beginning and thought of the energy costs, all the adaptations, how you will automate it, and the places where the air is placed and everything. So it's a complete redesigning of their entire organization that needs to happen, and that is extremely challenging for organization, even for fintechs.
Yeah. Yeah.
It's not as simple as cloud is going to allow this. And yeah, then we have that. So what are you seeing in the market that makes you hopeful that we will have a new cohort of banks, or do you think that the existing cohorts will transform? What is your feel?
I have to say that I think there'll be a new cohort that will surpass the likes of Starling and Monzo. I think there will be new models that fundamentally do start some disruption. Like I think in the next 5 years, most industries will be thoroughly disrupted. I think it's quite interesting that Anthropic has launched a vertical solution for financial services, right?
Yeah.
In the past, when I started, I remember several innovations that the bank had come up with and then passed back to IBM or one of the other vendors because we had to solve problems that the technology companies hadn't quite solved yet, right? And some of those were cost related. Like we didn't stick a server into every branch because it was super expensive at that time, right? A few years later, it became cheaper, and then servers were put in the branches, right? But we had to solve lots of problems like how do we distribute code to branches, right, onto 40,000 desktops when we've only got bandwidth for 56K? We were coming up with solutions on technology that we required for banking. They weren't necessarily banking solutions. And so we were ahead of the technology companies in many respects. Nowadays, right,
So
there is no bank that's ahead on AI than any of the AI companies, right? There's no bank that's ahead on database technology, on how to create the best microservices, whatever, right? We're well behind. So we're always going to be behind. And as banks should have been moving down the stack, right? We've been brought into this philosophy that we don't need to be, right?
well,
Whereas,
this is not true for China and Asia.
correct. If you look at Alibaba, right?
Yeah.
Alibaba, their stats on things like performance of databases have surpassed Oracle like by fivefold. And that's just crazy to think that there's a banking software company that literally has a better database than a database company. Yeah, you're right.
Apparently, my bank, I was talking about this with Chris Skinner 5 years ago. They were already changing the entire code of the bank every 2 or 3 years.
Yeah.
Just amazing. And if we think of it with their 310 lending capabilities that have been around for years, what is that? That is AI.
Yeah.
Is AI for everyone, for micro lending, for everything. Okay, back to I interrupted you. Yeah, that you were saying that X China or maybe Asia, broadly speaking, financial services are behind tech companies.
Behind tech. And the problem is that they've created such a legacy that it's hard to move on from, right? So if you're not in the microservices space, then you're at a 10x cost disadvantage of running the tech versus a monolithic kind of mainframe program. So that's just the cost differential, right? And at the moment, you don't have to worry so much about scalability because most of the old guys can chuck some more tin at the problem, right? But downstream, if we start to think, actually, when we have more efficient payment rails like Web 3.0, then we can start to stream money. Now we need a different level of scalability. This is a bit like the telcos going from statementing calls that we did a few times a day to statementing every byte of data and every text message that we sent. Yeah. It's an exponential growth in what they had to account for. The banks will have to go through the same when we start to stream money, because actually streaming money is something I think customers will really prefer to have, as opposed to overpaying bills 30 days in advance, and across a year you end up having overbilled your gas and water and electricity.
Yeah, cash flow
you stream it on use.
That's what you want. Management it's ridiculous that it is a problem nowadays, right? But
that exists because the cost of payments said we can't bill on a minute by minute basis or by an hourly basis even. We have to do it by the 30 days. And people get paid by the 30 days. So, but why should we get paid by 30 days? If you look at WageStream, they will stream you your salary on a daily basis, which is, quite frankly, I think probably the right thing to be doing.
Exactly.
But again, it has an impact on. So if you get efficient payment rails, you can start to stream money and things become different. When you start streaming money, now the requirements of everything else suddenly changes.
Collateral management becomes very different. Credit, accessibility, and management becomes completely different, which are huge impact areas.
So, just that one aspect of an efficient payment rails is one thing. Then you start to add intelligence. And like I said, my 30-year thing about if you can start to manage the organization more efficiently, what can the human brain power be doing instead? They don't have to be doing a lot of the customer servicing. What they should be doing is probably more of the advising or the coaching or the helping. This is the aspirational goals for managing money anyway, which is what we really want. We don't really want to deal with the transactions.
Yeah, or collecting information or collecting analytics or combining knowledge and resources and KPIs, and then spending a lot of time on those tasks. But Dharmesh, going back to the banks, the legacy, we have the technology now. Who was it? Google that was saying that they can change their code in, I don't know what the number was, in a very short number of days. Why is this not happening with banks? Isn't the urgency there? Why aren't we changing the core banking systems as soon as possible? I see your smile.
The first problem is that it's scary and it's complex, right?
Yeah.
Because humans are having to work this out. But if I look at Mechanical Orchard, then they're using AI to help you to rewrite parts of your legacy in whatever priority that you want, so that they will deploy the AI onto the code base. And you say, look, we want to reprioritize, let's say, the core itself, the ledger part of this. Can you unpick the code just to segment out the core piece, right? So that we can have that rewritten in microservices. And now so we're not limited by our human capacity anymore to look at millions of lines of code. We've got machines doing it intelligently. So there is no reason necessarily, but at the same time, if let's say we've got the most efficient set of microservices, most flexible set of code, but we're still going to deliver the same old loans and deposits, we might as well not have changed, right? We might save a bit of money. I always remember what the CEO of Lloyds Bank said to me. And I had a chance to ask him one question, and that question was, Sir Brian Pittman, if you had the chance to save 50p in the pound, right, on costs, would you do that or would you sell more? And he said, I would always sell more before I save money because it's harder to sell more than it is to save money. Everything about core has been really about becoming more efficient. If you look at the neobanks, they argue that they're more efficient. Actually, that's not the problem. The problem is how do you sell more and get more business into a kind of vertical that's been stagnating in kind of growth. There's been very little product innovation. That innovation is about to come, I think, with a combination of more efficient payment rails, intelligence, and then the imagination to rethink banking.
So you're saying, and we agree, that there hasn't been that much product innovation. And there's been a lot of innovation on the customer experience side, that you agree, but not product innovation. And definitely, as I like to say from the blockchain world, in the manufacturing of these financial products, we haven't innovated. There's been innovation in the blockchain space.
That's another.
Right.
That's why I say the Web3 architecture, because
Yeah.
here we are, banks are looking at things like Dora, having no reliance on one specific cloud vendor. If you had a distributed blockchain architecture, then you wouldn't have to worry about who your cloud provider is because your service would have been distributed, right?
Yeah.
It's interesting. I think we need to rethink, not based on the old, but we don't want just faster cars. We want different banking.
Yeah, we want different credit products, right?
Correct.
And in investing, we want the blurring of the lines between private and public markets, or we want the different ways to run liquidity pools. And that's for payments too.
Yeah.
And those are the appeals of DeFi. And that's what those that are looking at, the bankers that are looking at that, are starting to understand what is the part that is really innovative here and makes a lot of sense. Or for collateral management, tokenization, especially for institutional clients, for treasuries, the life of treasury management would completely change. Should we be able to have a level of adoption of these rails? Because here we're talking at infrastructure and distribution as a consequence, innovation, right? But it's tough to do that one. And I, by the way, think that the disruptors, the new cohort that we imagined and alluded before, will probably have a combination of these, of the blockchain for finance and AI in their infrastructure and how they're built. I can't imagine that they're not heavily based on the cryptographic capabilities that these ledgers offer, plus all these other different ways of manufacturing financial products.
Yeah, what I find amazing is that everyone is dismissive of Bitcoin, but it's never been hacked.
Yes. Yeah.
And banks, you don't have to go Bitcoin, but you do need to understand how it works so that you could maybe learn from it.
Yes. It's what Jack Dorsey has been saying for years with his Bitcoin maximalist view. I never forget, this is old. This must be definitely before COVID, which feels like a decade ago, but it's not. And he was saying that every business should do a project with this open source code of Bitcoin blockchain to understand, to gain knowledge and understanding from that. He's not saying adopt Bitcoin for whatever, whether it's your treasury or your payment rails, but what can you learn and understand from something that is purely, there's no face behind it. It is decentralized. And as you said, it's never been hacked. And whatever has happened, it has to do with centralized interfaces, right? Exchange and so on.
Correct.
The chain itself hasn't been happening. So if we were to close our discussion with a positive note, and I would say a futuristic note, what would you say are your thoughts around our industry? Yes, it is behind the tech innovations, but are you hopeful that we will have soon a new generation that is really very innovative and completely new compared to what we have? Or what thoughts do you want to share as a closing statement?
Sure. I think for me, everything starts with a vision of what you want to make happen. And this is if you've got a strong, purposeful vision, right? Behind it, I think the technology is moving faster than we've ever been used to. So technology is no longer the barrier. I remember we couldn't buy certain amount of storage because it was super expensive at the time to put into every single branch server in effect. But we don't have any of these limitations. We don't have the limitations of
Why
process
isn't it expensive
memory,
also now to buy compute power?
isn't it?
It is, isn't it expensive? Isn't compute power expensive?
No, it's super cheap. It's super cheap. We are underutilizing the kind of compute that we already have, let alone anything else that we buy. NVIDIA launched, as we know, at the beginning of January, a supercomputer size of a pizza box, right? $3,000. Geez, that would have been running 3 or 4 banks 20 years ago. We're at a point where the capacity to do stuff is way beyond our imagination. And I fundamentally believe that this is an exciting time for those truly creative minds that have strong visions about what they want to deliver, right? And then hand it over to the techies to build out. But I'd love to be in that camp where we are thinking differently about banks, it's not about accounts and transactions. It's about what we want to achieve out of life, whether it's getting our kids through a great school or saving for retirement, etc. It's about life journeys and making them happen.
Goal-oriented banking, you think can be delivered now that we've been talking about it
100%.
for a while, right?
Absolutely. If you think about like generative AI, just having that conversation about this is the level of income I have, you can see from my account, how much do you think I should be saving if I really want to retire at 40 rather than 60? Why shouldn't it come back and tell me that actually, based on the job that I'm doing, I won't be earning enough. Now is a time to start reskilling so I can earn enough to retire earlier if I want to. It has to be broader than the transactions. You go to a financial advisor, they're not going to give you any of that advice. They don't have the capacity to go more broadly.
Well, yeah, it will be asset allocation. It will be, again, very financial product focused.
Yeah. Look, today I deal with 2 separate financial advisors because they deal with very different product areas.
Yes.
So already you're in the fragmentation. Now I've got not only several financial providers, and then I've got 2 separate advisors who, by the way, also need to speak to my accountant, my solicitor separately.
Exactly.
Right? Now, so, this is the problem that the single brain solves is that, look, if you take a tech vision, the single brain should be your tech vision because it's about centralizing all of these things, not only within your organization, but outside of it to add real value to the customer.
It's impossible today to optimize 24/7, so to speak. What you are doing, what each individual or business is doing in their financial life, and nobody is looking after your interests, right? The classic example, no bank is going to come and tell you, why do you have 50,000 whatever pounds in a checking account sitting, or somewhere where you're earning X amount of interest, you can move it over there. Nobody's going to say to tell you that, or that you could take out a loan on these assets and grow your business or do something.
No, you want something else that is more intelligent than you and your advisors, right? Because we have human limitations. We're at the point where we should be now imagining solutions beyond human limitations.
Yes.
And that's the point I think that you're making in your book also, is that this isn't about looking at the individual silos. It's about bringing it all together and thinking beyond what we had done in the past. We don't want to be more efficient. We want to be better.
Actually, we closed the chapter with an analogy of, think of a galaxy, how intelligent it is. Each planet is intelligent on its own, right? And then there's this collective between the planets and the galaxy, and there's that level of intelligence. We should be aiming, the North Star should be the intelligence of a galaxy. We can do it because there's this contextual capacity that was extremely limited before, and we couldn't have that contextual intelligence. And now we can, because actually each of us as individuals, as business owners, as whatever economic participants, are in a very complex galaxy that we are interconnected in different degrees. And we want that intelligence to tell us, because we are family people, we are professionals, we are sons and daughters, we are brothers and sisters, we are so many things, right? And we can't optimize for everything financially.
No.
And we want that intelligence, and we deserve it. The capability is there, right?
Yeah, I think, and I'll go back to another philosophy of mine, which is dream big. And that is that if we only even think of stuff in a banking context, we're still not dreaming big enough, right? So instead of saying, how do I solve this life journey of retirement, we should ask the question, should anybody retire? Should anybody retire? Why should anybody work? Instead of fearing AI, should we be harnessing and saying, look, now let's give everyone the option of whether they work or not, whether they find purpose in discovering new things or being creative, whatever, right? Why aren't we working on a more broader basis to say, look, how can we create a society that has these choices? Because ultimately, even if we are working and earning, money gives you choices. That's the most important thing. So how can we democratize that? Would be the bigger dream for me. But
yes, security mainly, right? And choices are the two big things that money give us. And this is talked and discussed. And how can we build a better society? And on that note, I'd like to thank you, Dharmesh, for this wonderful conversation.
Brilliant. Thank you so much. I've really enjoyed it as usual. Thank you, Efi.